Hello and welcome to a new video. I made a video last week saying Nvidia is a definite buy. Now since my last video, the share price has gone up from $1,089 per share to $1,208, and I've got some alarm bells going off. I am moving from a strong buy position to a hold position. Now don't get me wrong, I still believe the share price will still go up, but it's gone up so fast recently, I'm expecting a major pullback in August of 2024. The next big stock moving date is the 16th of August. Mark that date on your calendar. Why the 16th of August? Well, because we have the next quarter earnings report. I will make another video for you to tell you our next move, so make sure you follow and maybe subscribe so you don't miss out. Now things look great. Look at and earnings per share of $6.38. Now with the share split, this will come down to 60 cents per share, but that doesn't affect the value of the company at all. And you're probably wondering what I'm doing at the moment. At the moment, with my personal portfolio, I'm sitting at 11.7%, and that's enough risk for me. I am not a qualified financial advisor, so I can't tell you what to do, but I believe 10% of your total portfolio is where you want to be with Nvidia right now, until just before the 16th of August, that is. Now to work out if the share price is overinflated, we need to look at the price to earnings ratio, or PE ratio for short. So basically, a high PE means the share price is overinflated and it's not a good buy. A low PE means it's undervalued and underbought, so it's a good time to invest. And average PE is around 20 to 30, but if a company is showing good growth and is successful, a good PE is around 50 to 60. At the moment, the PE for Nvidia is 70.78. Now, a PE metric isn't going to tell you the whole story, but it's a good guide. So let's extrapolate the share price till August. So we're assuming the trend will continue. At the start of the year, the share price was $481 per share, and now we're sitting on $1,208. So let's say on average the share price is going up $120 per month. In 2 months' time, we could be at $1,450 per share, or $145 post-split. If the trend continues, the PE could be around about 84. Now that is overinflated, but it's not necessarily bad news. And you're wondering, why isn't it bad news? So if August earnings come at or above prediction, the share price will go up slightly. And by slightly I mean 5% or less. And the share price may continue trending up depending on how rosy that earning report is. But if it's a negative earnings report that comes below predictions, right? The share price will plummet maybe by 20 to 30%. So you need to be very careful about how many shares you're holding during that time. Like I said, start of August, I'll put out another video to give you our position, and we'll review the PE ratio and then make an assessment based on that. Now, I don't want to sound pessimistic and saying Nvidia is overinflated, because I'm looking at these earnings predictions and I like what I see. The earnings per share is beating predictions in the last quarters by a healthy margin. So I'd be expecting the actual earnings to beat the prediction in August, but we'll look further into that closer to the time. And if we compare predicted earnings from the second quarter of 2024 to second quarter from the previous year, we're looking at 136% increase, which is insane. And let's have a look at the revenue. So second quarter 2023, it's $13.51 billion, and the predicted second quarter of 2024, it jumps to $28.54 billion, which is 111% increase. So things are looking good, but everyone else seems to have the same idea as you and me, and the stock is going to be overinflated. Well, it is actually overinflated at the moment. And that's why I've gone with a cautious hold on buying more Nvidia at the moment. But what are your thoughts? Are you still buying the stock, or are you selling it? Or are you like me and just holding with a wait and see approach? Anyway, this is the end of my video. Thank you for watching, and I'll see you in the next one.